Well, today I wanted to talk about the June Westpac Melbourne Institute Consumer Sentiment Index report that's just been released. Remember 2 months ago when I stood in this garden and I had the shocking news that consumer sentiment had fallen by 17.7% in April. That was the biggest fall we'd ever seen in the 47-year history of the survey, and it had the lowest level that we'd seen since the early 1990s when we had our last recession. A month later, for May, the news turned very positive. So after that 17.7% fall, we saw a 16.4% rebound in the index. And of course, that reflected the success that we'd had in dealing with the virus and the earlier than expected opening of the economy. The components of the index that responded the most positively back in May were the 12-month outlook for the economy and intentions for buying household items. We also saw back then that there was quite a disparity between the states. So Victoria only improved by around 8% and New South Wales by 23%. This time we've seen a 6.4% further lift in the survey. So remarkably, we've taken back all the losses that we saw in March and April, and we're now only about 2% below the average between September and February. Admittedly, that average was only 95, so it was much lower than 100, and therefore we had a clear majority of pessimists and optimists. So we were going into the COVID crisis with pretty weak consumer sentiment anyway, but the good news is that we've retraced back to those levels in the strong results that we've seen in May, plus 16.4, and in June, plus 6.4%. It's my view that it's unlikely that this momentum will continue. I expect with ongoing social distancing restrictions, with parts of the economy that'll continue to be closed, such as foreign travel, with permanent structural change that this crisis will generate for the economy, that I wouldn't expect that we'll see a further strong rebound in the index that'll be sustained over the next few months. Once again, as we saw in May, the really strong performers were the 12-month outlook for the economy. But having said that, that index is still the lowest we've seen, excluding April and May, since the global financial crisis. And we also saw a really strong rebound in people's intentions for buying household goods. But once again, that index is about 16% below the long run average. So still a long way to go in that regard. There was also a very welcome result around the outlook for the economy over the next 5 years. That's at an 18-month high. And I guess you might say, why would that be the case? I think people are clearly seeing the way through this crisis. And I think they're also hoping that we'll see some real structural change in the economy around industrial relations, around tax reform, around Commonwealth-state relations. Indeed, we saw a part of the survey showed that in March, only 50% of respondents approved of the government's budget policy. That's lifted to 75%, and that's clearly indicating that the respondents are behind the government's JobKeeper and JobSeeker packages. On the labour market, we saw another strong recovery in the index around how people see the unemployment rate over the next 12 months. And indeed, that index is now around about average levels. I'm surprised about that, and we'll just have to see how the unemployment rate evolves over the next few months. I'm expecting that by the end of the year, the unemployment rate will be around 8% compared to the current 6%. So respondents there might be somewhat disappointed. The other big story was around housing. When we asked people whether now is a good time to buy a dwelling, that held up well, but it's still around 15% below the long run average. However, the outlook for house prices, there was a solid 10% gain, but that index is still 40% below the levels that we saw before the crisis in April and May. And when we ask people what's the wisest place for their savings, they're still extraordinarily cautious, providing a big preference for paying down debt, bank deposits and superannuation. And indeed, the proportion that prefer housing as an investment is down at 9% from 13% 3 months ago, and that 9% is the lowest on record of the 47-year period for the survey. So I have to say that the housing aspects of the survey are still sending a pretty negative signal, and while house prices are holding up well at the moment on very low turnover, we remain very cautious about the house price outlook. Overall, Westpac has slightly changed its growth forecast for the year. We now expect the June quarter to contract by 7% rather than 8.5%, but recovery in the second half of the year to be around 3.5% rather than the 5% that we were looking at before. Overall, we're expecting the economy will contract by 4% over the course of 2020, recover by around 3% in 2021, but most importantly, by the end of 2021, we expect that the economy will still be operating below the level of activity, around 1.5%, that it operated at the end of 2019. Thank you very much.